So good morning to everybody. I wanted to say thank you again for joining us, and thank you to Jody and with SCORE, obviously putting this all together. There's nothing more important than for us to be able to spend time together, but since we're doing the shelter in place, this is probably the next best thing. So we really appreciate Jody and SCORE allowing us to continue to put our Brunch and Learns together. So thank you, Jody, very much for that. And without further ado, I'd like to introduce you to our host with not only always the best in home staging, but also one of our affiliate committee members as well, Janie Jensen. Janie, are you there?
I'm here. Can you hear me?
We can hear you. Thank you, Janie. I'll let you take it from here. Thank you very much.
Good. Great. Well, welcome to all of our participants this morning. We are so happy to see you and happy that you could join us. Eventually, we'll all be back together in person. But until that time, our affiliate committee is going to be continuing to have our monthly Brunch and Learn sessions. One of the things that we try to do as an affiliate committee is to put together topics that are of interest to the real estate affiliates. And we couldn't think of a more timely topic when we were discussing this than discussing what are the things that are affecting the real estate industry during COVID-19. So we have three great panelists that are going to be talking about that this morning. We're going to be talking about some of the top issues that are such as landlord issues, relief programs, mortgage changes, and any impacts, I believe, on credit scores because of COVID-19. So I would like to start introducing, we have three panelists that are going to be with us this morning. And our first panelist is Ashley D. Gonzalez, Esquire, who is a partner and real estate lawyer at the law firm of Brewer, Offord, and Peterson. Ashley focuses her practice on representing real estate agents, brokers, investors, homeowners, and landlords in real estate matters, which is a whole list of things. In addition to being an attorney, Ashley is also a licensed California real estate broker, which gives her both the practical side as well as the legal side. She's not in office. Ashley enjoys spending time with her husband, her two pups, and her baby son. Okay. Our next panelist is Ruth. Some of you probably know her as Ruth Vanderstein Benjamin, who is the founder of Financial Education Services. Ruth experiences spans over 25 years in the area of 1031 exchanges, real estate sales, loans, foreclosures, bankruptcies, evictions, escrow title, and also credit repair. One of the things that Ruth prides herself in doing is helping people get out of tough and unfortunate situations and guiding them through their consumer right laws. Ruth also is able to help new businesses as well as established businesses to establish business credit. Ruth is a member of SCORE's affiliate committee. And our next panelist is Jonathan Wyatt. Jonathan is a senior mortgage broker for Bank of the West. He has been a Bay Area professional in the area of finance for over 15 years. He graduated from Franklin University with a bachelor's degree in business administration and financial management. His experience includes cash management, financial planning, investment, and insurance consulting. And his current role as a mortgage consultant spans, nearly a decade between Wells Fargo Private Bank and his current employer, Bank of the West. Jonathan is also very active with various nonprofit organizations. Excuse my phone here, we'll have to get rid of it. Various nonprofit organizations, and he's on the board of multiple real estate associations. He is also a member of our affiliate committee. So we're going to start first with Ashley. We'll turn it over to Ashley.
Good morning, everyone. Perfect. Just getting my slides queued up. Okay, so I'm going to talk to everyone today about landlord issues, and I think we could talk about this for hours on end right now. It's a pretty challenging time for landlords, in my opinion, but maybe I can give you some insight on how to handle the most popular issues and also ones you may not think about that aren't necessarily in the news or anything like that. So getting started, let's see. The most common question I get, obviously, right now is, can I evict my tenant? And as most of you know, the short answer is no. And I'll explain why. There's some exceptions in the law where if the eviction is for public health and safety, you can evict a tenant right now if the courts will process it. But unfortunately, public health and safety is not defined. And so we have been kind of guessing what that means and trying to figure out, okay, would this eviction fall into that criteria? And if you kind of think about it and hash it out, it's pretty rare. Public health and safety, that might be something, maybe they are producing meth or something similar. So it's not common, and I have a lot of clients that try to stretch that definition, but my advice is usually that it doesn't fall within that box. But it is important to mention that that is an exception to the current rules. Another important question that I have asked is which moratorium controls. And in some areas of the law, local jurisdiction controls. So if you were in the city of Santa Clara, for example, the city law would control more than the county and then the state. Well, it's different for these tenant protections. It's whatever moratorium is the most protective. That's which one will apply. So it could be state, county, and city for some tenants. It just depends on what the issue is. And I have a good example for that. So I had a commercial client come in and they were very stressed. They said, yeah, we do this kind of business and our business is super slow right now. We can't pay the rent. And they had looked at the city of Santa Clara and there were no protections for commercial tenants. And, we were able to advise them that, hey, the county has protections for commercial tenants affected by COVID. So they were able to get some forbearance on their rent. So the way to think about it is that it's whichever law is most protective, that's which one controls. And as a landlord, you don't want to go and proceed with an eviction thinking, oh, the city of Santa Clara doesn't protect my commercial tenant, and then you run afoul of the county ordinance. You're going to be in big trouble on that. So it's important to know that they're usually more protected than you think, even if the local jurisdiction doesn't do so. We had a big change last week. Prior to last week, the Judicial Council, which is in charge of policies for the court, they put a sunset date for August 3rd on the statewide eviction hold for the courts. Well, that now has changed to 90 days after the emergency order is lifted by Gavin Newsom. So how that works is whenever he lifts the emergency order, I haven't gotten a clear indication that he will soon, especially given that he just required masks everywhere yesterday. It's 90 days after that. And so, the earliest we're looking at evictions being processed by the court is September. And that doesn't include my next slide, which will talk about payment of rent in the county of Santa Clara. So we're looking at a long time frame here and very frustrated landlords. Next, non-payment of rent. This is obviously the biggest issue right now because a lot of people are struggling. And in addition to the Judicial Council rules that I just mentioned, tenants in Santa Clara County have even more protections now. Per the county website, which you could probably find with a quick Google search, they've extended their own moratorium until the 28th of July. But the biggest thing that I see being an issue, because landlords have mortgages and they have to pay their expenses, is that as of right now, tenants have 6 months after the expiration of the moratorium to pay 50% of the rent owed, and then 12 months to pay the full amount. So if you think about it, 12 months from the expiration on July 28th of this year, technically a tenant would have until July 2021 to pay the full amount. So I think that's a pretty staggering time frame as a landlord and a homeowner, if you have tenants in there that have been affected. And I think it was something like 40 million people were unemployed or something like that. I saw on the news yesterday. So that's a year time frame in a lot of instances. I don't know if that will change. I haven't gotten any indication of that, but that's just something important to note. Next, I get asked a lot, can I serve notice? Should I serve notice? As of right now, landlords are pretty limited, but I do encourage serving notice in some instances right now. And there's a lot of reasons for that. So if you can either do 3-day notice, 30-day notice, or 60-day notice. And I've done talks before on which one applies and which one is necessary, required by the law. But a good way to think about it is that if your tenant is entitled to a 60-day notice, and that's usually only required if they've been there for more than a year, you may want to get the notice period started right now, even though I mentioned that evictions won't be processed for potentially 90 days. It doesn't hurt to get the notice out there and to get the clock running, because number one, a lot of times tenants will leave on their own, and eviction isn't necessary. Not everyone wants to be sued. But not only that, once you serve the notice and the notice period expires, you're done usually on the notice part. You want to be careful with acceptance of rent after the notice period expires, because you can create another tenancy. But in a lot of instances, I am encouraging my clients to start that notice period, because you have to wait the 60 days out anyways. And a lot of times the tenant will leave. That's not always guaranteed, but there are also a lot of risks with serving notice right now. I know with the county of San Mateo, if you violate their ordinance, you can pay triple damages. They call it treble damages in the law for violating the eviction moratorium. And so say if the tenant's able to establish $10,000 in damages, you're going to owe them 30. And so the courts are really not messing around. So it's not something that you can just go and do and think that, okay, if the tenant catches me, I'm just going to get a slap on the wrist. No, the courts are really going to be coming down hard on the landlord. So just be careful. And it doesn't hurt to ask me about the notices. It never hurts to make sure that you have the right language in there statutorily and that you're not violating any of the rules right now. Okay. This one, I wanted to bring this up because this isn't something that is necessarily front of mind, because this passed quite a while ago. AB 1482, there's an important section in 1946.2, which is what the Assembly bill updated in part. But for any leases that were entered into before July 1, 2020, you have to serve this notice by August 1st of this year. And for any leases entered after July 1st of this year, you have to serve it as an addendum. And why is this important? Because if you don't serve this notice, technically the tenant has an argument that they are protected by AB 1482, even if the property is exempt. So if you don't give them notice that, hey, and I don't know if you've seen the form, the CAR has a form, it's a rent cap and just cause addendum. They do all of the work for you. You just have to check a box if your property is a single family or otherwise exempt. But if you don't serve that form and let them know that you aren't protected by AB 1482, they will be in a lot of cases. So I think that's pretty substantial, considering that if they're protected, then you would need some kind of cause to get them out, either the at-fault causes mentioned in the code section or no-fault causes. And a lot of times I get landlords coming to me that, hey, my clients or my tenant's lease is expiring in August, blah, blah, blah. I don't have to do anything to get them out, right? Well, if it's an apartment complex or something like that, the answer is no. Expiration of a fixed term tenancy is not a reason to, it's not within the at fault or no fault causes. And so a lot of times you can't get a tenant out under AB 1482 for expiration of the lease. And so if you don't serve this notice, it's going to be a lot more difficult come at the end of their lease or when you need to get them out. So I just thought that was important to note because that needs to be served on the tenant. Also, over the last couple of weeks, my firm has developed a really cool website. I put the link here, brewerfirm.com/coronavirus. And I know, you hear about it every day and it's been talked about for over 3 months and you're probably a little bit exhausted on it. But we've created a website where they have city and county trackers as well as updates, articles, videos. Where if you do have a question, you don't know whether your tenant is protected or not, you can just go to the city on our website and we have the most recent laws on there, articles. I believe just yesterday, Senate Bill 939 did not pass. So we already uploaded our article on that. That was a big commercial tenant Senate bill that they proposed, where I believe the main part of the bill, which would have been substantial in the law, was that commercial tenants can renegotiate their lease with their landlord if they've been affected by COVID. And if the landlord didn't agree, they can breach the lease, or not breach the lease, but break the lease without penalty. So we have all those types of things on our website. I think it's super helpful. And if you have any other questions, feel free to message me in the chat. I'll check that here in a minute. And also, I have my contact information for you all. Don't hesitate to reach out. And if you're not sure about something right now with everything going on, it never hurts to ask.
Okay, good morning. We are going to next hear from Ruth. Ruth, I'm turning this over to you.
Hey. I'm just waiting for my slides to come up.
Sure.
She's working on it. All right, let's go slideshow from the beginning here. All right, we're going to talk about your credit today and impacting of COVID. So this is my family. We are a family-owned business. And as Janie said earlier, you would know me as Ruth Vanderstein, but I got married last year. So I have doubled my family size in daughters. So let's see, we're going to talk about life in COVID-19. So there's a lot of things out there. People are wondering, what's forbearance? Okay, they have forbearance and there's debt forgiveness. So forbearance allows you to temporarily pause or reduce your mortgage or credit card payments during a period of financial difficulty, but you pay the difference at a later date and your interest will still accrue. Now, debt forgiveness, that may come with some consequences, but a lender forgives some or all of the debt you still owe on the loan. So if you're experiencing financial hardship, talk to your lenders or creditors. Pay what you can. Stay up to date on your credit reports. And consider adding a consumer statement to your credit report. So an example of a consumer statement would be advised that the negative accounts on my credit report are related to the coronavirus. I intend to make up these payments as soon as I can. So that's a great thing to do, but when you're trying to clean up your credit later, sometimes those statements stay on longer. So if you've cleaned up your bad credit and that statement is still there, you want to think hard before you put that on, okay? All right, so if you've been affected by COVID-19, you may be eligible for relief in paying bills. That can help you prevent damage to your credit from late payments at a time when protecting your credit could help you increase your financial strength. While credit card issuers are offering to help cardholders during this time, it's not always clear what they may be willing to offer people who've been affected by COVID-19. To help, I put together a list of questions you can ask your issuer when you explore your options. It's possible that some of these questions may not be relevant to your situation. There's no guarantee you'll get what you want, but we hope they'll make it start the conversation with your issuer. So first thing is, can I skip or defer a payment? Will you waive my late fee? There are a couple other questions worth asking. Will I be charged a penalty APR? APR is annual percentage rate. Will you report my late payment to the credit bureaus? Will you lower my interest rate? Will you increase my credit limit? But hardship and forbearance programs are not automatic. You have to apply for most of them, and you will want to understand how they will affect your credit reports and scores. I've had several clients tell me that they have entered into an agreement with their lender or creditor, and the creditor is marking them late. So you have to watch for that. So the Coronavirus Aid, Relief, and Economic Security Act, signed into law a few months ago, gives consumers some credit protections. It dictates how companies that send data to the credit bureaus will report accounts for which consumers have payment accommodations in place. So if you have an accommodation and you live up to your end of the deal, an account that had been current previously will continue to be reported that way for both account status and payment history, but it won't wipe out the slate clean if you have any prior existing negatives. So if the account had been delinquent, it will still be reported delinquent until you bring it current. You can also ask lenders to add a code to your credit report to indicate you are affected by a natural or declared disaster. FICO does not consider the codes when calculating your credit score, but Vantage Score, which most lenders don't use, they will disregard late payments for accounts that have that code in effect. So a disaster code would make a difference if a lender actually reads the full credit report when making a decision. In a financial crisis, access to credit is the next best thing to a large emergency fund. If you protect your credit, you'll have more or better options when you need them, such as being able to qualify for a low interest loan. The most important factor for protecting your credit is not missing a payment. A payment that is more than 30 days late can cause your credit score to plummet, and the mark can stay on your credit reports for 7 years. Your score could also drop if you're using more of your credit limits, but that damage is more quickly fixed. Your score can rebound once you pay down those balances. If you're not going to be able to pay your bills in full, you'll need to prioritize and get some breathing room, and here's how. Contact creditors and ask what's available. It's the consumer's responsibility to reach out and get an agreement despite long wait times on the phone and overtaxed websites. You may be able to get a lower payment temporarily, skip some payments, or get a higher credit limit. Terms of hardship programs vary. Connect with your credit card issuers and lenders for mortgage, student loans, car, personal loans, etc., to find out about your options. Be sure to document any agreement, whether with screenshots or good notes about a phone call. Record when you called and whom you spoke with. Save emails and other communications. So if you decide to record a phone call in the state of California, you have to notify the other party that you're recording a call. So make sure you do that. Make sure you understand all the details such as start and end dates and implications. For instance, creditors could theoretically reduce your credit limit or otherwise make it harder to access credit if you ask for payment modifications. But the risk is small. Credit card issuers use algorithms to help figure out how likely you are to repay them after this crisis is over, and they still want customers. So check your credit report at least 30 days after any agreements take effect to make sure that accounts are reported correctly. If you see accounts reported as late when you have an accommodation in place or any other errors, dispute the information right away to protect your score. Guidance issued April 1st by the Consumer Financial Protection Bureau says that because of coronavirus, credit bureaus now have 45 days to correct errors on the credit reports, when typically it's only 30 days. So other things to consider: if you normally pay bills on auto pay, review them. Change them as needed so you don't overpay accounts or cause an overdraft. Though utility bills are not typically reflected on your credit reports, it's smart to add utility companies to the list of creditors you call. Like credit card issuers and lenders, many now have hardship programs for customers affected by the pandemic. Now, utility companies will mark your credit if you go negative, then they will put it on your credit report. If cash is so short that even with concessions, you are not going to be able to pay, know how to prioritize your bills. This includes shelter, food, heat, lights, transportation, and whatever else you need to be able to work, such as childcare and phone service. What's not essential? Everything else. Credit scores can recover. For now, focus on the basics. You may need to move if you can't afford where you're living. There's an exception to this rule. However, if you can't afford your mortgage payment, you may want to stay put. The foreclosure process typically takes several months, which means you could stay in your current home for free while you try to fix the rest of your financial life. Virtually any skip payment hurts you somehow, but there's a big difference between missing a credit card payment and missing one for, say, child support. The recently passed Coronavirus Aid, Relief, and Economic Security, the CARES Act, places special requirements on companies that report your payment information to the credit reporting companies. Again, if your account is current and you make an arrangement to have a partial payment or skip a payment or any other accommodation, then the creditor is to report the credit reporting companies that you're current on the loan. This applies only if you're meeting the terms of the agreement. And again, if your account is already delinquent and you make an agreement, then your account will maintain that status during the agreement until you can get the account current. The CARES Act requirement applies only to agreements made between January 31st, 2020 and the later of 120 days after March 17th or 120 days after the national emergency concerning COVID-19 ends. The CARES Act also applies to certain federal student loans and includes requirements relating to suspending payments and credit reporting. During the period that payments on federal student loans are suspended by the Department of Education, any payment that has been suspended is to be reported as if it were a regularly scheduled payment made by borrower. Now, if you don't have to suspend any payments, don't do it. Don't take a chance. Make your payments if you're still able to do that. So Ashley already covered the eviction, so we know that that is going to be extended there. So I'm going to turn it back over to Janie, and we can then hear from Jonathan.
Thank you so much, Ruth. That was great. And just to let everyone know, Jody's going to talk about this a little bit later, but I've been noticing some questions. Yes, there will be a recording of this, and she will explain how to get this. Jonathan, why don't we hear from you now?
Thank you, Janie, and thanks everybody out there for being here today. It is a big sorrow not to have these in person. You guys hear me okay? Beautiful. But it's nice to be here today to share all this good information. And what Ashley and Ruth has already said, it's interesting for me to think that wouldn't all of this information have been great to know 3-4 months ago, before this coronavirus hit. And, now we're just kind of catching up. But from what I heard this morning, and with Gavin Newsom, now requiring masks in public places, there is some help there, but we also have places like Florida, which I heard opened their restaurants and bars last week and now had the biggest 1-week jump in corona cases to date, 4,000 cases, new cases in Florida. So this stuff is still going around. And so this information, some of it is, as what has happened in the past. I'm going to be going over some financial relief programs, which are maybe just one-time things, but it's going to be good for us to understand and realize, what companies, what individuals, what municipalities have done for us, and which ones are likely to stick around. So let me just go straight through it. In no particular order, because as I realized as I was doing research for this, there are so many, specific things out there and relief programs that were available when this thing happened. This is an emergency. So I feel pretty proud to live in a place where there's so many availabilities and so many options for people to take advantage of should they need the help. So let's just go one by one. The CARES Act, there was this $1,200 stimulus checks that went out to people if they made under a certain dollar amount. So that was nice. That definitely came at a good time and helped people, be calm and still contribute to the economy. SBA loans were available to people with extra help. debt relief options, which Ashley and Ruth had touched on a little bit. We all know that the 2019 federal tax return deadline of April 15th, it's usually April 15th, was extended to July 15th to give people a little more time to get these things in order. And by the way, July 15th is coming up next month. You can still request an extension, and I believe, check with your tax advisor, it's still going to go to October 15th, which is a regular extension date. Some required minimum distributions, some RMDs for some requirement accounts were waived for people, for those individuals that can prove that they had some COVID-19 related issues, right? We always have to prove it in order to sometimes, take advantage of these things. Likewise, 10% early withdrawal penalty for some IRAs. Again, if you could prove that you were negatively impacted by the COVID-19, then you could be taking advantage of that one. The federal student loan interest waivers, that one was available as well to certain students with previous students that had student loans. And I've had customers with big companies that took advantage of the PPP, that's the SBA Paycheck Protection Program. They got hundreds of thousands of dollars to pay their employees to make sure that they could keep working in this time where maybe not everybody is still buying their products. The income's not coming in as much. So that was a huge one. They have SBA Economic Injury Disaster Loan, which is a lot smaller. One of my clients got like $14,000, boom, just put into his checking account, a week later, and he took advantage of it. Rent reduction, as Ashley was talking about, some of these people weren't even required to do it, but they just said, okay, you know what? Hey, I want you guys to be comfortable. I want you to just stay here and be healthy. So I'll take the brunt of that. I'm the wealthy landlord, so they took it upon their own generosity to do these things. What else? Furloughs. So if your company is not producing at the same rate and doesn't need the amount of people working for it, some people got furloughs. Hey, come back, in a few months when this thing is over, you'll have your job back. Some companies split that up. They would say, okay, you can choose to be let go right now, or maybe we'll do a 1 week on, 1 week off, 1 week on, 1 week off. And then for those weeks that you have off, you have the ability and the option to request, short-term unemployment. So it's, could have been a beneficial thing for people, get a little time off there. And then of course, forbearance, which Ruth also had mentioned. In the banking world, in the mortgage world, these forbearances for mortgages, for mortgage payments, could go from anywhere from roughly 1 month to 6 months, and it will depend on the amount, your application. And for people that, it's only 3 months. At the end of this thing, you have to pay in full as if you did beforehand. So if, you were one of the wealthier people that have just one house and a whole bunch of money in the bank, why do you need to do that? Was the question. But if you're, if you're living paycheck to paycheck, then yeah, that program seems a lot more beneficial. So those were the basics of the financial, relief programs that were available. Again, lots more actually available out there. I'll talk a little bit now about the banks and what's changed in them, and specifically lenders when it comes to mortgages. As we are all here as a real estate group to understand and realize what's going on out there, so we can help our clients. Some of the big, I would say that every lender was impacted one way or another. All lenders were required to offer this forbearance program. Yeah, but a lot of them, depending on their product mix and how they made their money and what specialties they have, had to tweak their product mix a little bit. Wells Fargo, for example, I used to work with Wells Fargo for many, many years. And they had the fraudulent accounts, of last year. It was a big scandal, and that required them to have a lot more oversight and a lot more requirements on their liquidity when they lent. So that led Wells Fargo to, if they wanted to do a refinance for a jumbo loan, they had to have the client have $250,000 in assets there in order for them to do it. They would do purchases, no problem, but if it was a refinance, then they needed the extra liquidity to lend that loan. So it's a little bit more difficult for them. When it comes to Bank of America, I have friends over there, and they said that their ability to lend on investment properties were a lot more, it was a lot more uneasy for them to be able to do that at this time. And even smaller banks that just kind of dip their toe into lending mortgages, some of them shut down their programs. So it hit everybody in different ways. With Bank of the West, we were lucky. We're not too big, we're not too small. And some of the changes that happened with us, we sort of suspended programs that we don't really use that often. We're taking now the time and the energy in our employee base to really work on the type of loans that we know that our clients want around here. So that makes a lot of sense for us. And yeah, I guess I'll stop right there and we'll swing around for questions a little bit later. Thank you.
Thank you very much, Jonathan. That was helpful. Okay, I'm going to ask each of the panelists a question. I do want to make a couple of announcements. If you send a question to a specific panelist, they will try and answer it for you, but because of the limitations and things, we may not be able to get to your individual questions. The second thing is that we may go over for a few minutes. So just to let you know that, just because we think the information is important. And some of you have asked about if this is being recorded. The answer is yes. And at the end, Jody is going to explain to you how to get a copy of the recording. So Ashley, I'm going to start with you. If you could unmute. Great. So my question to you is, what is the biggest pitfall that you see landlords and property managers falling into during COVID-19?
Yeah, this is a big one, and I think that it's one of the most costly pitfalls, and it's habitability issues. So I've had a lot of tenants come to me and also landlords, and tenant makes a habitability complaint. For example, rats in the unit. And under the 1941.1 statute, which is habitability, I know it by heart, I'm crazy like that. Rats are listed in that statute. And a lot of times right now, the landlord is saying, oh, due to COVID protections, I can't get anyone in there. I'm sorry, we're gonna have to wait. No, I don't think that's a good excuse. There's things that you can do to work around that. You may want to ask the tenant to leave and then send in the vendor, make sure they have PPE, they have the mask and gloves and everything like that. But you have to provide a habitable premises regardless of COVID-19 or not. And I think that a lot of people are leaning on it unjustifiably to avoid their duties under the statute. And I don't know if anyone, in this webinar has been involved in a habitability lawsuit, but I mean, I get letters from tenant attorneys sometimes for $200,000, $300,000, $400,000. So it's not something to take lightly, and I think it's a huge pitfall. And just make sure that you're getting your vendors lined up and making sure that they're wearing the protections and that they get out there as soon as possible. Janie, you're muted.
Thank you. Okay. How's that? Great. Okay. Ruth, can you answer a question? I have a question for you.
Okay.
Great. Will I automatically get an accommodation agreement with a creditor?
Okay, the answer is no. You must contact your creditors, your mortgage, your student loan companies, and you have to call them. They're not going to contact you. So please make sure that you contact them, that you keep good notes. You can record the conversation as long as you let them know you're recording the conversation. And also, again, keep up to date on your credit reports to make sure that that they're not marking you late, because that is happening to some of my clients, that they're getting marked late even when they're in accommodation agreement. So you want to protect your credit.
Good. Thank you. Okay, Jonathan, I have a question for you, if you can unmute.
I'm here.
Great. What are the costs associated with the financial relief programs?
Great question, Janie. Thank you. And that is a very sort of all around the world question, because I can answer it in so many different ways. So let me give you just a couple of ways that this has impacted people. When it comes to mortgages, you know, if you took advantage of these 3-month forbearance programs and then decided as you were sitting at home that you wanted to refinance a property with the same program, boom, automatic denial. Right? We can't say, oh, you know, uncle, I need, you know, a few months to pay my bills, but then all of a sudden you can qualify for a mortgage. So, you know, that's been tricky. And for people who have gotten these other programs, the PPE and the other SBA loans, and if they're getting all these ones, and I've had clients just say, listen, I was scared at the beginning of this thing, and I took as many of these programs that were available to me, and I didn't know if I need them, and I'm probably going to pay them back because I don't really have anything to pay for them. So that can be the Achilles heel sometimes. If you're working on a purchase and you have these programs, that they will automatically, you know, decline you. In one of my scenarios, our underwriters were okay to just simply remove this extra capital that was injected, and they looked at what they had actually earned by themselves, and that earning potential was good enough for them to get the loan. So luckily, we can make things work, or if you know, people don't really need their forbearance programs and they can just pay it back and get out of there. But these things might come up in the future, and you know, as an overall impact in the U.S., you know, if you look at our gross national debt now, it was around 2.3 trillion in the beginning of March, and now it's 2.6. So those $1,200 stimulus checks, all those payments to people that are not working and not really, you know, producing anything for the gross national product, it comes from somewhere, and it's, you know, it's all of our debt now. It's our gross national debt that we're working on. So that, I would say that's a big one.
Good. Thank you. Okay, Ashley, I'm going to go back to you. I have a question.
Mm-hmm.
Okay, great. What are the 3 top things that landlords and property managers can do to protect themselves during these times?
Yeah, the answer to that one's pretty clear in my mind. It's communication, communication, communication. I think Jonathan hit on it perfectly. Given that we're handcuffed right now with the courts, try to work something out with your tenant. I mean, people aren't unreasonable in a lot of instances, and a tenant is better than a vacant property. I know that's easier said than done, but there's a lot of things that you can do right now to protect yourselves. And one of the biggest things that you can do is to try to get something in writing. A lot of times I have clients ask, well, I want to give my tenant a $500 rent reduction or even like $1,000. Try to get the tenant to sign something, because what happens is you may be adjusting the lease. So even when the virus is over, you may be committing to a new rent rate accidentally. You know, while you're offering this generous thing right now, once they go back to work and they're able to pay the full rent, they may have arguments that, hey, no, we agreed to a new rent rate and this is my new rent. And so while you're offering something, try to get something in return. And I don't see any reason why they wouldn't sign that. You can base it on the lift of the emergency order. You can say, hey, when Gavin Newsom lifts the emergency order, we're going to go back to A rent instead of B rent. And so that's a big thing you can do to protect yourself, and just communicate with the tenant. Usually, you know, and this applies to agents with their buyer, seller clients and tenants. They want to be heard, they want to hear from you, and they want you to work with them. And so that's my biggest advice.
Good, thank you. Okay, Ruth, I have a question for you. You can unmute.
Okay.
Okay. How long do the bureaus have to respond to my disputes?
During the coronavirus period, they have 45 days to respond. In a normal time period, it's 30 days. So you have to know that they have the additional time. And also, if you dispute online, they get additional time. So make sure you dispute by letters, and it's a good way to keep tracking of everything. It's always good if you send your letters certified mail, but you don't have to. Just make sure that you get them in the mail.
Great. Okay, Jonathan, one question for you. Okay.
Go ahead, Janie.
Yes, question is, can I still qualify for a mortgage?
The short answer there is yes. And can everyone just imagine for a second if the real estate industry was not considered essential, how many people would lose their jobs? Mortgage bankers and stagers and entitled people and processors and managers and notaries and people at the bank that get the checks and so on and so forth. There's hundreds of people I've counted before, and you can argue thousands. And if all of those people just stop working, I think that we might be in a little bit of trouble. So thank God for Zoom and things like this that kind of help us out. And when it goes to actually getting a mortgage, it's the same few steps that I always do with my clients and that usually people do, which is maybe a 15-minute brief phone consultation or coffee consultation. Maybe now it's a FaceTime consultation to really understand what are you trying to do, and where do you think that your issues are. Everyone's got got money, credit, assets, but there's always a little bit of hair, as we say, on loans. So we just have to talk about those up front. And if we need, we go in and we get somebody's help like Ruth with credit to try to revert some of the damages that COVID-19 has brought upon us. So use your, definitely can get a mortgage, talk to your experts and any of those partners that might be able to help you, attain that goal.
Great, thank you. One of the things that I'm going to do is, because we don't really have time for questions, if each of the panelists would put their contact information in the chat box, and then that way people want to email you a question afterward or contact you later on, they can do so. So I think Ashley's already done that, and so has Ruth. So Jonathan, when you have a minute, okay. And Jody, I know you're out there somewhere. If you could let people know how they can get the recording, when it's going to be available and how to get that recording.
So again, this is being recorded, and sometime next week, probably Tuesday, Wednesday, we'll get it up on the SCORE website. Score.com/webinars will be where that is, and I can put that in the chat box. And at the bottom of our weekly newsletters that we send out, we also have a link of where you can go to get those webinars. And then I know there's a few people who were also asking for slides. Ashley and Ruth, if you are willing to share your slides, I've got thumbs up from both. We will include a link to both of those PDFs. We will make them PDFs that will also be on the webinar website for everybody to access. And I know it's hard sometimes to write down the contact information, so we'll make sure that that is also posted with that information next week.
Great, thank you. Well, I want to thank all of the panelists because this has been absolutely informative. This was a great topic. It was so timely, and I think all of the panelists have done a wonderful job to provide information to you. And also, thank you, and also to provide their contact information so that they can, if you need to contact them, email them a question later on, you could do so. Realizing that they all have businesses, so they might not get back to you today if you email the question, but I can guarantee they will get back to you. Jody has put in the chat box on how to get the webinars, so that's available. And I think that this has just been a great program. I don't have what we will be having next month at Brunch and Learn, but I can guarantee we will be having a Brunch and Learn. And so, Keith, is there anything else that you'd like to say before we end the meeting? Well,
thank you all very much for being here today. Really appreciate all of your support. Obviously, as we shelter in place, we obviously really value you agents sticking with us, helping support us as affiliates, and of course, being part of our knowledge base. So thank you all very much for being here today. Really appreciate it. Please continue to show your support to the affiliates. Please continue to reach out to each of us as we continue to help build your business. We want to make sure that the real estate industry stays strong, especially in the Bay Area, and that's our whole momentum right now is just trying to make sure that we can kind of keep, the staying strong together, alive as much as possible, even when we shelter in place. So God bless you all. And thank you all very much for being here today. Thank you very much for the panelists, and thank you for SCORE. And Jody, thank you, Jody.
Yes, Jody, don't get rid of us yet. I'm putting my contact information in the chat box. So give me just a minute here.
You have 1 minute there.
I'm trying my best.
Okay. Less talk, more type.
Thank you.
And definitely everybody, please keep an eye out for our next Brunch and Learn that will be coming up on the 3rd Friday of next month. And we'll be getting that information out to everybody probably within the next week and a half to 2 weeks. So thank you all very much for your support.
Okay. Don't do it yet. It just cut me off for a minute. So let me see if I can continue. Okay.
15 seconds.
Quiet. Okay, it's there, and hopefully everyone who needs it can see it. And again, we want to thank you for coming, and thank you for being here today. It's been great. Okay.
And thank you, Janie, Jensen. Thank you very much. Always the best home staging. Thank you very much for helping put this together. She did a great job. So thank you all very much.
All right. Thank you. And everyone have a good day.
Blessings.